I'll throw some numbers in here because Gunter doesn't like them. But look, if you think about foreign exchange, I think it's around a $7 trillion market. When you think about equities, it's 85 trillion. Fixed income around 100 trillion. The market cap right now for blockchain assets, 1.7 trillion. The market cap for blockchain assets right now is tiny. It's de minimis compared to where things are going to be. Now, the SEC, the old chairman Clayton, on his way out the door to Philadelphia conference, said he can see all assets moving onto the blockchain. Equities is just 85 trillion. When FX through stablecoins moves on, another 6 trillion. So where we are right now really is the drop of the bucket when it comes down to blockchain assets, and things are going to get a lot more exciting. And it's going to happen at a speed that I don't think anyone's really ready for. In the United States right now, you get 0.5%, 0.5% of the US population that has an electronic wallet. I'd say in the next year, maybe 60% will. And that's because the OCC, the Office of Comptroller and Currency, came out and said, guys, instead of doing ACH and SWIFT wire transfers, we want you guys to start using stable coins. And they specifically talked about USDC. So as stable coins start getting, and this is a $250 a year business, SWIFT wire transfers. As soon as folks start getting their electronic wallets for that, you're moving from 0.5% of the US to 50, 60%. And that's when you're going to see huge adoption happening. And it's sort of like cell phones. Folks listening to this, Google cell phone adoption in the US. For the first 10 years, no one wanted a cell phone. Give you cancer. I don't know if you remember that. You'd hear it from your mother. But now I think there's 1.4 cell phones per every American. In other words, things happen quickly. 85 to 95 flatline, just like blockchain, just like Bitcoin. And then it takes off. And we're seeing here a tremendous change. Now, you say that we're being ambitious. I don't think I'm ambitious. I know that all assets, certainly in the equity side, are going to move on to the blockchain for pure AML KYC reasons and for efficiency reasons. And we all know that something is always going to be successful if it removes friction from the marketplace. And the one thing that removes friction is the blockchain. The ability to get rid of so many middlemen that exist today in the equities market or in the whole area of raising money. Think about the old days. You want to raise 5 million, 10, 20 million, 100 million. You got to give 5, 6% away to the guy that's helping you raise money, the underwriter. You don't have to do that anymore with the type of security token that we designed, that we put together with the SEC. And it took us 3 years. Now you can go directly to your fans, to the general public, and raise money. This is going to be a huge change, certainly for the United States and elsewhere. And I think that the next level, and this is where Gunther's going to do quite well, is finding ways to passport digital securities that come out in Germany or Switzerland that are approved there and have them then available so they can trade on my exchange in the US. Because obviously I've got a huge audience. Europe remains rather divided in terms of what the blockchain rules are in every single country. And that's going to be a bit of an issue going forward. But you can have something right now that's registered in Germany or registered in Switzerland. I want to list it. And the guy that figures out the way to passport that or do a digital ADR equivalent is going to be someone that has a heck of a lot of back and forth. It's going to be a very, very profitable business because I've got the folks that want to look at these things and they want to trade them. And I know there's a lot of product all around the world. And I think that's going to be really exciting because one of the things we always pitch about digital securities is the fact that, you can trade on multiple exchanges all around the world, but we know that's not really the truth, is it? Because right now I'm an SEC registered security. That doesn't mean I can go list it in Germany or list it in the UK in Archax. No, what it means is I'd have to package it in some way. And I don't think anyone's come up with yet the packaging. And finding the way to package things so we can get the true potential of all of these digital assets that we're creating today is, I think, going to be one of the most profitable avenues for investment. But you're already seeing huge ecosystems growing up around security tokens in the US and elsewhere. I've got folks working on entertainment deals, folks working on real estate deals, folks working on athletic deals. But we're bringing all of these ecosystems together. And it's super exciting because what we're doing is we're bringing democratization of assets and asset ownership to the world. And that, I think, makes it all very, very exciting.
No, fantastic. And I agree with you. So let me go to you, Irinda. So with INX, you guys are trying to do something really exceptional. Can you tell us how you guys work? Because you have 40% return for the people that buy your token. You are resisted with SEC. So just a bit case study about you guys. I think it's very important to explain And I think show case studies, because that's, I think, important here as well.
Well, first, I think that we move very slow. And I think that we've had a lot of examples here of, essentially the cat's out the bag. So you think of NFTs, right? Everyone runs out there, starts selling a token based off of whether they own it or not, and they sell it to somebody, and then they take the money. I'm sure there's going to be a lot of scams in this NFT going out there, just as you find a lot of scams in DeFi, and you'll find a lot of things that go out there and charge out there, and then the regulators knock on the door 2 or 3 years later. What INEX did is we sat there and said, look, we want to create a security token. We think this is the future, but not if it's just for accredited investors in the US, and that's really what they were. It was sort of the sleepy backwater. And we said, well, we want to have security tokens that retail can buy. We want to be a full security that has absolute transparency with a full prospectus, just like you'd find Nike or Amazon. That took us 3 years, probably $3.5 million in legal fees, 11 companies involved, 11 different law firms, and Ernst & Young. So it was a heck of a strike, but we didn't run out the door. We weren't the cat running out the bag. Instead, we sort of set our time to set up the right, what we believe to be environment, because we think that institutions, when they get into this, they want to deal with someone that's got a clean shirt, that hasn't sort of, tripped over the regulator rug. And I think that a lot of folks go out there and end up tripping over that rug. Now, INEX is a company, we start going live at the end of this month, where it's a crypto trading company. There's already crypto trading companies in the US. There's Coinbase, Kraken, a couple of others. But these guys are already bursting at the seams, with only 0.5% of the US with an electronic wallet. Literally, they're restaurants, they're standing room only. The chefs are like, going crazy. The servers go down whenever Bitcoin makes a new high or new low, and there's lines out the door. And we're opening up a new restaurant on this street. Now, I'd say that our servers are probably a little bit newer, things may be a little bit better, but certainly no one's sitting in my chairs right now. So when it comes down to the onboarding process, we believe we can onboard a lot of people very, very quickly. But we don't just offer crypto, we also offer security token trading. And we believe that that's going to be a very large asset class based upon how we built our security token, which is now seen as the pathway for all equities that are certainly trading on NASDAQ or New York Stock Exchange to move over onto the blockchain. Now, the question is, well, wouldn't the New York Stock Exchange get into this, or NASDAQ? Well, the truth is, I don't think they can afford to, number one. But number two, we talked to them and said, we want to list with you guys. We're full security. They said, not for 2 or 3 years. And this reminds me of that discussion when Elon Musk went to the big four and said, hey, guys, I want to do electric cars. And they kind of laughed at him and said, good luck. We'll catch up with you later. Well, look, try catching up to Coinbase now with a $100 billion valuation. They could buy the New York Stock Exchange, or they could buy NASDAQ. That's how fast this market's moving. But also, when you look at the New York Stock Exchange and NASDAQ, it's two storefronts and really just one restaurant behind. That's the DTCC. And there's nothing blockchain or digital about the DTCC. It's Bob Cratchit sitting there writing JP Morgan sold shares to Goldman Sachs. So when you look at the background here behind the US exchanges, I look at these guys as sort of like, you know what? They're the best blacksmiths in the world. They know all the farmers who bring all their horses to them. They're very successful, but we're driving cars now. And it doesn't matter how long, for them to go digital, it's just like the big four going digital. You got to change your whole background. You got to change all of your plants, all the supply lines that you've built up and monetized. I don't know if you, at business school, we used to always look at how Ford had done their supply line. And this was like, 100 years of thinking into how they get all of their things in. They can't just switch that overnight and go electric. It doesn't happen. It's going to take a lot of investment. And the same thing with the exchanges in the United States, for them to turn around and go digital. It's a huge investment. And they're going to have to make it soon if they want to catch up, because we're already running out the door. But we're not running out the door without the regulators. We worked with the regulators for 3 years. So we sat with them in the passenger seat. We are not running from them looking in the rearview mirror. So I think that there's a lot of excitement that's happening now. You talk about the 40%. We don't give 40% of our company. What we did is we did a security token and we linked it to 40% of the profits, or there's a legal term, net operating cash flow of the company.
That's what I was saying.
From however we raise, we make the money, whether it's on the security token trading platform or the crypto trading platform. And we're selling these tokens to retail, directly to retail investors at like $1,000 minimum, because we wanted to have an exchange where you can get involved with the exchange. If you're going to trade on an exchange, why can't you own some of the profits? Because every other exchange in the US, you're either giving your money to the Winklevoss twins, and I watch Social Network, I think they've got a lot of money already, or you're doing it to Coinbase and the private equity and the venture capital companies that own that. So do you want to invest in Coinbase at $100 billion or invest in INEX? When you already know that the absolute interest in all of these companies is huge already, and it's just going to grow. Think about this. When we go from 0.5% of the US population having an electronic wallet to 0.6, that's a 20% rise. Already, watch when Bitcoin makes a new high or new low. Take a look, and you'll see coming up on Twitter, every one of the existing exchanges says, I'm sorry, our servers are down, or we've got to slow back right now in terms of our onboarding. You know, the capacity constraints are huge in the crypto business relative to how many people actually want to start trading on it. But not just that, people were first out the gate, but it doesn't mean that they've got the best service. Netscape was a great company. I don't know if it looks like everyone here is old enough to remember Netscape, but now nobody knows what Netscape is. People thought VHS and beta were the big deal. You know, VHS is going to be the future. It was the future for like 3 years. And then when we sit there and we think about what was the biggest IPO in our lifetime earlier on, like 10, 20 years, it was Palm Pilot. No one will ever catch up with Palm Pilot. No, the reality is technology changes quickly. Often the early leaders, the guys out the gate, they trip up at some point. They're either too comfortable or their service is absolutely horrendous. There are some crypto, places you go on right now, you don't even get a bid offer. It just says buy or sell. And that's not great service for me. And then after you've done the trade, they charge you 130 basis points. I mean, you can do that when you don't have any competition, but that's yesterday's news. So going forward, we're looking at your yields are going to be like people getting charged 20 basis points, not 130. You'll see a bid offer spread. We're coming into this in a very big way, but we're also coming into it with that strong foundation, working with the regulators. And, Peter said this as well. It's like, you don't fight the regulators. The regulator knows where you live and they're going to catch up with you. They're going to find you. And that was our thinking from day one. And that's why we got together guys like David Wield, who was the vice chairman of NASDAQ. And that's why, our earliest investors were Charlie Lee behind Litecoin, Ricardo Spagni behind Monero. Everyone wanted to have this ideal where you've got something that's regulated, but also is built for capacity. Do you know what's going to be the biggest hire of minimum wage jobs, I think, over the next 10 years? It's not going to be McDonald's and fast food. It's going to be onboarding specialists onto crypto trading firms, because that demand is so tremendous. This isn't like, guys trading foreign exchange like I did back in the day. And it sounds like Derek did and maybe Peter as well. I mean, foreign exchange it's sort of a niche product. A lot of guys trade in Japan. What is that? 70% of all overnight trading is done by Japanese retail investors. It's big in Europe, but in the US, nobody really cares about it. But crypto, when people start to see what they can do with it and how fast you can transfer money with it, and just the fact that the bank you use right now is fleecing you. Think about this. The average guy in America takes out $40 from their ATM. When they do so, they have to get charged a 2% fee. That's 500 basis points. I mean, people complain about the fees in crypto, but you're used to these kind of fees you get at your ATM machine. On top of that, you put it in the bank and you get 0.25%. In Europe, you're lucky if you get 0.25. Maybe you pay 0.25. In Japan, you're paying your bank. Does that make any sense? If I can take my fiat money, buy USDC, stick it over at somewhere like Celsius and get 10.9%, and have the OCC, the Office of Comptroller and Currency, who's the regulator for federally chartered banks, turn around to me and say, hey guys, we want you to start using stable coins. Well, guess what? I'm going to use stable coins. I'm going to get my 10.9%. Because why on earth am I keeping it at the bank anymore? And then sure, the bank could afford you to pay you that because they're doing credit cards at 14%. They can afford to pay you a lot more, but that's their profit. But as you get into DeFi and you get into just anything in crypto land, you find out that profit comes back to you because we cut out all the middlemen. And that's the most exciting part about crypto or about the blockchain, especially about Bitcoin, is the fact that you realize that once you break free of all these things that we've been taught are correct, that banks are your friend, that banking is how you make money, that we used to be told about that the compounding of interest. And that's how, remember, everyone looks at the chart and says, if you put $1 in the bank in 1930, what's it worth today? Oh, it's huge. Yeah, when there's interest rates that are positive, what happens to the compounding of interest when negative interest rates come into being? Well, it collapses. I was looking at it. I put something on LinkedIn the other day. There's a photograph of a 1928 house that Sears was selling for $1,200 or something in 1928. Obviously, that house today would probably cost you $1.5 million. So when people look at Bitcoin and say, well, if I buy it today and it's going to be $1 million in the future, well, of course it is. You've got a fixed asset and you've got inflation in the US and a weakening dollar. Just look at old property prices. So your grandparents say, I paid $500 for my house and now it's $1.5 million. The real estate didn't go up in price. That's what people don't understand. The dollar collapsed. So if you can buy a fixed asset like Bitcoin and you can hold on to it, that thing's going to save your life, not your life, but your wealth. And that's the crazy thing about crypto is that we've got to relearn a lot of things that we were taught in school. You've got to relearn about whether the bank's your friend. You've got to relearn about interest rates, relearn about what's a great investment. I think everyone sitting on this panel was always told by the parents, make sure you buy real estate. It's a great investment. It's not that real estate's a great investment or an old master painting is a great investment. It's just that the rich have known for quite some time that if you buy a fixed asset, it's going to go up in price because fiat currency is going down. And what Bitcoin does is it gives you a fractional way to own that master's painting or that real estate or anything. So suddenly now you can save your wealth just like the wealthier part of the population used to. That's my rant.
No, I'm very passionate, and I think we all subscribe to what you said. I think the challenge how you take this forward. So, Irinda.
And coming back to Douglas's comments about the US and the money management, but also the payment infrastructure, I normally, because I've been fortunate to work and live in 5 different countries and 5 different jurisdictions, and the last one in US, I was so surprised to see the banking system in the States. I mean, that's like 15 years behind what we do in Denmark and in other European countries, right? They still write checks, right? I hadn't written the checks in like 30 years and I couldn't do it. I had to get the banker to actually write the check for me so I could sign it. And I was not interested. Online business or online transactions in the States in a lot of banks, you put it in the 22nd. They actually sent the check. We still do it today for an office I got there. They sent the check to the landlord that then actually bring the check to the bank and clear it. That's online banking in US. So it depends on the culture. So if we're looking at US on the payment side and the banking, I'm like, they're scared like hell because it's like going from kindergarten, taking a PhD. But in Europe, we already taken high school. So it depends on where we're coming from. And what Gunther was saying, you go out to the street and you talk to ordinary people and what are you doing, Peter? Yeah, I'm doing this and that. Oh, I heard of Bitcoins. That's really scary, right? That's more or less what 98% or 95% know about this business. We need to bring it to the masses. And yeah, that was my rant.
No, very good points, and I think it's very important that part. So I want to go, and I think,
but I don't have an answer what it's really going to be.
I got something to say on this, if that's okay.
Go ahead, Douglas.
Look, there's tens of thousands of tokens all around the world, but there's tokens and there's tokens, right? I'd say that half of the utility tokens that are listed on Coinbase today or listed on Binance certainly would be seen by the SEC in the next 2 or 3 years as being securities. So XRP isn't going to be the last, and it certainly was the first. But there's plenty of companies out there that'll just issue a token saying, you know what, we got a way to raise money. And what they forget about is that regulators have certain laws all around the world. And if you raise money in the United States, you got to be registered with the SEC. That's just the way it is. You know, check that box. If you haven't checked that box, you're going to be in trouble. And I think a lot of tokens are going to end up going the way that Telegram did, where Telegram raised at $1.2 billion and had to return it back to the individual. XRP, goodness knows where that lawsuit is going to go. But if you're thinking that that's going to be a settlement in the next 2 or 3 months, you're crazy. Because even if they did make that into a security, they'd have to go back and do KYC, AML, and every single person that's owning the utility token right now. And you think everyone wants to go through that? Because that's going to be the future. And so right now, there's a lot of tokens. The cost again to do a token, I don't know, $5,000 to put 200 million tokens out there. But that doesn't mean it's worth anything. because the real risk comes from if you haven't followed the regulatory authorities when it comes down to what you do with your token. And that's going to be the defining feature. Now, we believe that we've helped define what a security token is in the US by doing the offering that we did. And so now there's a map, and the SEC has referred to this as being, this is a map, and Ernst & Young now uses this as the roadmap, and so does MWE and the law firms in New York, as this is the roadmap if you want to be a public company on the blockchain in the United States. So there's a roadmap there. There's tests as well to see, is this a security? You know, are you investing in a company? Do you expect to get a return, or is it a utility token? But certainly it feels like that regulators have ideas of what things are. Are they utility? Are they currency? Are they security tokens? But a lot of the guys that build these tokens have no idea what a regulator is. And so most of the guys are coming from a technology background, and they think, hey, my buddy did something. I created a token. I'm going to go out there and I'll sell a token too. And they sit there counting their money. This is fantastic. I got $15 million I've got in my pocket. I can start my company. And that's because they've never even run into a regulator. I think that most of us here have come from a regulatory background where we're afraid of the regulators for good reason, because a regulator will shut you down. And if you don't work with the regulators, you're going to be in big trouble. And so that's why each of us here works for a company or with a company that believes that the regulations are important. And there's other folks that have made a lot more money than all of us together. But they didn't follow the regulators, and they're going to have to give it all back. And so you can start with 2,000 tokens today, or maybe 10,000 that exist in the world. Maybe 1,500 of them are going to end up being, you know what, these were actually regulated and put out in the right way. But I'd say by the time we figured that out in 3 years' time, there'll be another 80,000 contracts, security tokens. Do you know why? Because every single company that's in equity in the United States, Switzerland, Germany, elsewhere, it's going to move to the blockchain. Every 5-year note, every 10-year note, every treasury bill will move on to the blockchain. So we're going to have lots of different issues or tokens or coins, but they're just going to be regulated. So right now, a lot of guys have run out the gate. They're there, they're listed on exchanges. They may be zombie coins, or they may end up being, you know what, you just weren't a regulated coin, which then turns you into a zombie coin. But I think in the future, there'll be a lot more tokens, but people will just understand at that point what a regulator is.
Yeah, I think probably you're the only one in the US at the moment.
So DeFi for me is tough being in the US because of the anonymity that's involved. Now, when you take the INX token, you can't move it to another wallet unless that wallet is whitelisted. So it's going to make it very hard for folks in the DeFi space to be able to move that around unless the wallet that it moves to has all gone through a KYC AML. And so there's a limiting factor. Now, DeFi can be popular offshore, but I think onshore in the US, it's going to be hard for a regulated institution, let's say a BlackRock, to get into something like DeFi. And while the returns may be spectacular, right now, because it isn't regulated in any way, it's something that they can't touch. And I think that you have to remember that about the bigger boys in the United States can only deal with regulated institutions that follow strict AML and KYC standards. And so you don't find that as much in the DeFi space today. And maybe you will in the future, but then it wouldn't be DeFi. And so DeFi is a little bit constricting when it comes to, or restricting when it comes down to institutional players. For individuals, I think that individuals are very excited about it. I think one of the most surprising things for me over the past year was when Sushi came out. And I think after 11 days of its being in existence, it was listed on a US exchange and offered to US retail investors. And that absolutely shocked me, because I can't believe that the institution that was offering it hadn't done a due diligence or hadn't looked into it or didn't have any sort of information for folks other than the fact that, you know what, this is exciting. It's making the news. Let's list it. And so I don't think you'll find that at INX. I think that we like to make sure that we are offering something that is a utility token or a security token or a currency. And we know that inside and out. And you'll never see me list something that's 11 days old. So again, we're the slow guys with a tortoise, but that doesn't mean we're not going to win the race.
I think it's a great perspective, but I think
I think that the 6 people that are in this discussion understand how big blockchain can be, but that's because we're in an echo chamber now. Once you sort of get into crypto, you surround yourself with a Twitter feed that's surrounded by folks in crypto, and you believe that every single person is thinking the same way. But I think it was Peter that said this earlier, or was it Gunther? Like, once you go outside your office and once you kind of go outside your zone, nobody knows what the hell you're talking about. And those people still look at it as being that's for drug dealers. Now, I've had conversations with heads of banks in the US that still have this view. Crypto, drug dealers. They've got no understanding of how fast this is going to turn around and turn their entire companies upside down. And so I think that analysts in general absolutely have no clue. Now, banks don't talk about this as well because the reality is they haven't figured out how to make money off of it, right? They're debanking the system with blockchain. And once a bank figures out how to make money off of it, they'll be offering it and they'll be talking about it as much as they can. But it's taken them a little while because you can't really make money selling Bitcoin to your guys. And so, I think that they start with custody. You can make money in custody. That seems pretty simple. It's just about security. And then they'll move on from there. But I can tell you something. Obviously, the analysts have no idea. But maybe they're told by the banks, don't talk about how big this is going to be until we can actually build it to be as big as it's going to be. And if I put my druthers together, I'd say that any bank analyst that talks about blockchain right now has got, a mouthpiece in his mouth and he's being told to be quiet and stop talking about it.
And not to put the wrong kind of idea on my father, but he was a very clever man. But when I went to him and said, can I please get the internet? He was like, no. And I was like, why not? And then he said, well, it's just about pornography and those kind of things. And that was it. And it took another 2-3 years until I really got it. And I was just barely using it. And then within 5 years, it was taking up. In 10 years, it was taking up even more. And so it's rightly, as you say.
That's how you know. If in the early days, everyone says this is for pornography and it's for drug dealers, it's going to be huge.
So it's going to be super huge, right?
They're the earliest adopters.
And one question for you guys. So in terms of NFTs, we have right now the art, ironically is the last digital asset that is starting to explode. But what do you see right now with the music industry, film collectives, for instance? Right now, even Christie's is selling right now NFTs of a lot of different things. And not just, we have fashion coming as well. So this is going to create, because the NFT is probably less regulated item that has less impact on the regulators. But like I think was mentioned by all of you guys, and especially Douglas, I think touched the point. Okay, it can be actually act, and it can actually be taken because you need to have it still in a wallet somewhere. So how do you see this? And I think especially in the context of what is happening in the last months.
I think Christie's will grasp at anything to make themselves interesting to the younger population. So I think that that's obviously a marketing ploy. I think that NFTs are exciting. Jack can sell his tweet on Twitter. Do you know why? Because he owns Twitter. But if I sell my tweet, do I own that tweet or does Twitter own that tweet? These are questions that haven't been answered. If I have an NBA Top Shot, does the NBA own it? Does the basketball player own it? Or do I own it because I put it together? The question of ownership in NFT isn't there. So there's folks doing all sorts of trades right now, not really understanding the provenance issues. And I think that until that becomes known, then it's going to become interesting. Now, obviously, it's in the news because something sold for $69 million. Now, something sells for $69 million, but the market cap is 250. That doesn't tell me it's an exploding industry or it's an exciting industry. It tells me it makes the news, makes a story for that afternoon, but it hasn't yet really hit the mainstream in any way whatsoever. And so I think that NFTs have a way to go. It's something exciting. It's something that if you'd asked us 3 weeks ago, what's an NFT? We would have all sat there and said, I've got no idea. And we've all had to learn about it quickly because everyone talks about it in the future. I've been asked, are you going to list NFTs on my exchange? No, you can't list an NFT on an exchange. You list it on something like an eBay. It's a non-fungible token. And so, people don't really even understand how these things would trade. Well, they trade like on an eBay. And you set up an eBay to trade them. But, there's only so many pictures of someone's cat that I want to buy in digital format. Now, I'm sure that if we were to take something like the Mona Lisa and you were to take a photograph of that, and the Louvre took a photograph of that, it's a great photograph, and then they burned the Mona Lisa, and this was the last ever digital photo of the Mona Lisa, I'd be interested to see what that would sell for. I think that would probably sell for something. And that has then the provenance of who owned it, who took that picture, everything else. And and it was the last ever picture. It wasn't like the postcard. So I think that there's going to be room for NFTs. I think it's an exciting development. But again, if it's not regulated, not for me. Dennis, thank you very much for having us. Really enjoyed being here. I think you've put together an eclectic group of individuals. I think that what's really crazy is you can put someone that's into centralized, someone that's into DeFi, someone that's into, you can put us all in the same boat, because the reality is we all have the same views that something's about to happen and it's going to be really big. And it doesn't matter, whose direction is going to be the big one, because they're all going to be big. And that's the most exciting thing about this space, is that the toughest part is to actually get the surfboard and then put it onto the wave. But this wave is going to be so big that it doesn't matter which surfboard you're on, it's going to be good. And you can fall down a number of times and it doesn't matter, because we're at such the start of something that's going to become absolutely tremendous. So look, it's great meeting all the panelists and chit-chatting here. And once again, thanks for putting together a great event. Thank you.